Yo, what is up everyone? This is Oliver, and for today let's do a trade recap on the trade that we took yesterday on US30. So for today guys, I will explain the trade, the reasoning behind the trade, and the narrative behind the trade, okay? Why I took the trade, alright? So let's start guys. So in Dixie, the bias yesterday, okay, my bias yesterday on Dixie dollar index is short because we have a fair value gap right here, and this is the Wednesday candle, right? So I anticipated that we will have a rejection here at this daily fair value gap, and then we will take out the previous day's low, which it did right here. Alright, so that was the bias on the Dixie. That's why I was bullish on US30, and I took a buy right here. Okay, so right now I will explain why I took this trade. Alright, so the first thing you will notice we have a fair value gap right here. That's where I enter my buy, and then my stop loss was just below the inversion fair value gap right here, and then I targeted these relative equal highs, buy side liquidity. Alright, so notice that we have a low right here, right? We have a low. So what's below this low? Sell side liquidity, right? So anyone that is long and then trailing their stop below this low, so there's a large pool of liquidity below this low. Price moves to seek liquidity, to rebalance inefficiency, and to rebalance equilibrium. So also to generate liquidity. So those are the reasons why the market moves. So right here we have been consolidating and we are generating this sell side liquidity. So in my mind I was anticipating that this low maybe in a later time will be taken out before going to the upside. That is the idea that is in my mind at that moment. Alright, so why did I trust this sell side liquidity not being taken out and I took this long right here? Why did I trust that this low will not be taken out? I'll teach you guys how to use an SMT divergence. SMT divergence is like this, okay? So we have a low right here, and then we have a higher low on US30. If we compare the US30 and NAS 100, diba yung US30 and NAS 100 is correlated pairs, so they should be moving in tandem. But notice that we have a low right here, and then we put a higher low right here. But notice that Nasdaq, so this is Nasdaq right here, right below this chart of US30. So this is Nasdaq. We have a low right here, which is the same in US30. So we have a low US30, we have a low right here on Nasdaq. Notice that we have a lower low. We have a lower low on Nasdaq, but we have a higher low on US30. Why is that? So right there we have a cracking correlation between those between these two correlated pairs. So we have an SMT divergence right there. So which means we have SMT divergence, which means we have manipulation, okay, occurring between these pairs, and we can anticipate a reversal at this point. Okay, as you can see, it reverses to the upside. So that's one confluence. That's why I trusted this low will not be taken out, even though the idea in my mind, okay, even though I am anticipating this low, this sell side liquidity, this large pool of sell side liquidity, even though I was anticipating that this low will be taken out first before reversing to the upside, I trusted that this low will not be taken out because of the fact that we have an SMT divergence right here. That's why I took this buy, and I trusted that it will not go dig deeper below this low. Also, so right here we have 930 opening. Right here, price drop. We have a sell side liquidity right here, relative equal lows, sell side liquidity taken out. All it was doing when it was dropping right here at 930 open is to take out this low, rebalance the fair value gap, and that's it. So this is it was repricing here inside the fair value gap, and then it leaves that this becomes a balanced price range. So no need to go down there. If the order flow is bullish, it should not go back. Okay, it should not reprice there because it's a balanced price range already. Now that's another confluence, right? Another confluence. So sell side is already taken out here. We have relative equal lows. Now I waited for a shift in market structure. Right there. We have a short-term high right here. We have short-term high right there. Right there. Right there. Short-term high was broken. So we have a shift in market structure right there. We have a fair value gap. That's where I enter my trade. And then I just put the stop loss below the inversion fair value gap. Why did I put my stop loss below the inversion fair value gap? Because price can still dig deeper, okay, below the fair value gap here. Price can still dig deeper here, but I don't want to see it, trade below this inversion fair value gap. That's why I put my stop loss below the inversion fair value gap. Okay, notice that we dropped here. As you can see, we dropped here. Price taps the top of the inversion fair value gap. Notice the sensitivity right here. As you can see, price dropped there, touch the top of the inversion fair value gap and leaves it. Notice how very strong it leaves this price level right here. So as price is going up, we have a fair value gap again right here. So I mark this as the candle was trading to the upside. I mark this fair value gap, and then price retraced back inside the fair value gap. And then as you can see, we have sensitivity here at the top of the fair value gap. Okay, the wicks can trade through it, but the bodies will tell you the story. As you can see, the bodies are closing just near the top of the fair value gap right there. And as you can see, price trade to the upside, taking out the buy side liquidity. So right there I took like 1 to 2, so 1 to 2 RR, and then I closed the trade right there. So that's what that was the narrative behind the trade. That was the reason why I take the trade, okay, the bias and everything. So if you guys like the video, please like this video, comment anything that you want, follow me, and see you guys in the next video. Peace.